Hello everyone, and welcome to this short training session about off-payroll working rules, more commonly known as IR35. In this video, we cover what IR35 is, what's changing, and how to implement these changes in the Sage 50 Cloud payroll software. So before we cover what's changing and how the software can support you with these changes, let's take a look at the background of IR35 off-payroll working rules. Off-payroll working, or IR35, was introduced in 2000 to ensure that people working through an intermediary, such as a personal service company or PSC, who would have been regarded as employees if they were directly engaged by the client, pay broadly the same tax and national insurance, or NI, as if they were employed. Since the 6th of April 2017, in the public sector, it's been the responsibility of the employer to determine if a contractor is a deemed employee and falls under the off-payroll working rules. In the private sector, it's been down to the contractors themselves to check if the rules apply to them. Where the public sector employer has determined that the worker is a deemed employee, the worker would be added to the payroll and tax and NI deducted from their fees and employer NI paid on the fees. If you would like more detail on the existing off-payroll working rules, there's an excellent article on the gov.uk website entitled Understanding Off-Payroll Working, IR35, which you can access via the URL shown on screen. That's the background to IR35 covered then, so let's move on to what's changing. The Autumn Budget 2018 announced the extension of the off-payroll working rules to medium and large-size organisations in the private and third sectors from the 6th of April 2021. The new IR35 legislation was originally due to go live on the 6th of April 2020. However, this was delayed due to COVID-19. The extension of the rules doesn't apply to small organisations. But what do we mean by a small organisation? Well, to qualify as a small organisation, a small company, subject to the Companies Act 2006, must meet two of the following criteria: fewer than 50 employees, annual turnover of less than £10.2 million, total balance sheet assets of less than £5.1 million. A simplified test also applies to some clients and considers annual turnover. You must apply the rules if you have an annual turnover of more than 10.2 million and are not a company, a limited liability partnership, an unregistered company, or an overseas company. There are also rules which cover connected and associated companies. If the parent of a group is medium or large, their subsidiaries will also have to apply the off-payroll working rules. Let's put a bit more meat on the bones of what's changing for those businesses for whom this does apply, starting with an overview. So from April, medium and large businesses, so the client, that engage contractors working through personal service companies will be responsible for determining the worker's status. If the client determines that the worker is a deemed employee, more on which later, then the contractor should be added to the payroll of the entity that pays the PSC, or the fee payer. The fee payer is often the same entity as the client, but is sometimes a different entity. For example, if the client engages contractors through an agency. It's really important for you to have clarity on which role or roles you're fulfilling in the IR35 legislation. Are you a client, a fee payer, or both? If you're fulfilling the role of the client, what does this mean for you? HMRC have detailed 9 steps clients may need to take to prepare for the changes to the off-payroll working rules, which are as follows. 1. Look at your current workforce to identify individuals who are providing their services through a PSC. 2. Talk to individuals and agencies you engage with, as you may need information from them on some engagements. 3. Determine if the off-payroll working rules apply. Check if the rules apply for any contracts that will extend beyond or start after the 6th of April 2021. Decide who in your organisation should make an employment determination. You can use HMRC's Check Employment Status for Tax or CEST service to make determinations, the link for which I will show you shortly. After you've determined if the rules apply, you'll need to tell the contractor and any agency you engage with the outcome. 5. Who will operate PAYE? Consider if you or an agency will need to operate PAYE, and if it is you, put in place processes to make sure the correct income tax and national insurance contributions are deducted for engagements inside the rules from the 6th of April 2021. 6. Dealing with disagreements. You'll need to set up a process to deal with any disagreements about the employment status determination, and this is a legal requirement. 7. Keep records. You'll need to make sure you maintain a robust audit trail. It is a legal requirement to keep records. 8. Test your processes. You'll need to test your processes, systems and controls to make sure you're ready. And finally 9. Changing working practices and contracts. You should follow the processes you've set up to revisit status decisions and make new ones if you change working practices, change contractual arrangements, renew contracts, or create new contracts. The 9 steps you may need to take can be found, amongst other useful information, in the gov.uk article entitled Prepare for Changes to the Off-Payroll Working Rules IR35 for Clients, which you can access via the URL you can see on screen. As promised earlier, here is the link for HMRC's Check Employment Status for Tax, or CEST service, to make determinations. Moving on to the role of the fee payer then. If you are fulfilling this role, what does it mean to you? When you receive the worker's employment status determination and the off-payroll working rules apply, you must calculate the deemed direct payment to account for employment taxes and national insurance contributions associated with the contract. Deduct those taxes and employee national insurance contributions from the payment to a worker's intermediary. Pay employer national insurance contributions. Report to HMRC through real-time information the taxes and national insurance contributions deducted. And finally, apply the apprenticeship levy and make any payments necessary. Please also note that employment allowance cannot be used against payments to deemed employees. Full details of the fee payer responsibilities under the off-payroll working rules can be found in the gov.uk article via the URL you can see on screen. It's worth noting that HMRC have recently published a policy paper outlining a soft landing period. The soft landing period measures are in relation to the client and fee payer organisations only, rather than the contractors themselves, as it's the clients and fee payers who will primarily be burdened with additional responsibilities from April. The key points from the policy paper are that customers will not have to pay penalties for inaccuracies in the first 12 months relating to the off-payroll working rules, regardless of when the inaccuracies are identified, unless there's evidence of deliberate non-compliance. HMRC have committed to not using information acquired as a result of the changes to the off-payroll working rules to open a new compliance inquiry into returns for tax years before 2021/22, unless there's a reason to suspect fraud or criminal behaviour. And the policy paper also outlines how HMRC will support customers who are trying to do the right thing. As part of this, it outlines that HMRC may contact businesses to discuss how they are applying the changes with the aim of helping them meet their obligations. Let's finish up the legislation side of things by focusing on what this means from a payroll perspective. As previously stated, if an employee is assessed to be inside of the IR35 rules, then they're classed as a deemed employee. This means that although tax and national insurance contributions should be deducted, they're not entitled to any other employee benefits, such as statutory pay, pension, or holidays. An indicator must be included in the full payment submission, or FPS, when paying a deemed employee to ensure HMRC deal with the deemed employment accordingly. The good news is that Sage Payroll software has added features to ensure this legislation is complied with. Let's take a look. So let's talk product and discuss what changes have been made to the Sage 50cloud payroll software to support you with the IR35 legislation. The first of which relates to the employee record. Let's find out more. When your process date is set to on or after the 6th of April 2021 in Sage 50cloud payroll, you can set the employment type as deemed when you create a new employee. The employment type can then be found within the employment tab of the employee record. This will then feed through to other areas, ensuring the employee will be included or excluded where appropriate. When you set the employee to deemed, the full payment submission, or FPS, includes the relevant flag to notify HMRC that they're a deemed employee, as per the legislation requirements we discussed earlier. There are some other points you need to consider when processing with deemed employees within Sage 50 Cloud Payroll. Let's cover those now. Starting with tax and national insurance. Tax is calculated as normal, so deemed employees should choose Statement C on the starter checklist to ensure the basic rate, or BR, tax code is used. Both employee and employer national insurance is calculated as normal, using the NI category appropriate for the employee. If the deemed employee leaves, they should be supplied with a P45, and if they're still employed on the 5th of April, they're entitled to a P60. The apprenticeship levy should be applied on the calculated NI, but employment allowance must not be used on the calculated NI. Statutory payments are not applicable, as the deemed employee is not entitled to those benefits, as we discussed earlier. Student or postgraduate loans should not be processed for deemed employees, and they're automatically excluded from any auto-enrollment pension steps within the software, such as pension assessment. Finally, to ensure your nominal linked journals are correct, we recommend you assign these employees to a specific department, then set up departmental overrides. I'll show you a link to a Sage article detailing how to do this in just a moment. Please be aware, though, that while student or postgraduate loans and statutory payments are not applicable to a deemed employee, Sage 50 Cloud Payroll will not prevent you from setting these up and processing them. A couple of Sage help articles to draw your attention to. The first covering Sage 50 Cloud Payroll and off-payroll working rules via this URL, and the second, as just promised, detailing how to set up nominal link departmental overrides for deemed employees via this URL. All that remains for me to say is thank you very much for watching this video, stay safe, and I'm sure I'll speak to you again very soon.